The reason why you are struggling with your trading is because you have not fully integrated the higher time frame analysis with the lower time frame analysis so that you can know how to proceed when you are trading. Because trading only comes down to two things: where do you get in and where do you get out? It's as simple as that. And in this video, I am going to show you a simple way to simplify your entries and exits using the weekly cycle. If you are new to the channel, subscribe. Let's jump into the video. All right. Number one is understanding what the weekly cycle is. Now, the week has 5 days, and we will represent those days with these lines. So we have Monday there, and then we have Tuesday, we have Wednesday, we have Thursday, and we have Friday. So if you are totally new to the markets, this is the simplest way to know where the day is headed. So Monday, we don't trade. We just let Monday set the high and the low of the week. So notice the rest of the week, we don't have those days. Monday being the first day of the week sets the initial range. Now, once we have the high and the low of the week, Tuesday can be our signal day, because if Tuesday breaks out and then closes outside of the range, so closes as a breakout, this is a strength signal, and it's telling you that on Wednesday there is a very high probability price will continue in the direction of the breakout. So when you come to the screen on Wednesday, you will be looking for buys. Now, Tuesday, if it breaks out, but then the close is back inside, then that is a weakness signal. And it's telling you that on Wednesday, there is a very high probability that price will reverse. And this simple concept of the weekly cycle takes advantage of a simple concept called breakout and failed breakouts. Let me explain. So imagine Monday being one candle. So, and you can see a lot of people out here call this power of 3, CRT, whatever people want to call it. This can be Monday. Sets that high and that low, like that. So what you do is you draw that high and you draw that low. You've not traded. You are waiting for the market to give you information of where there's a high probability of price moving. The next candle, if it's bullish, that is Tuesday. If Tuesday closes like that as a successful breakout, now you know where Wednesday is headed. We are headed up. And if Tuesday breaks out, but it's pushed back down, and it closes as a hammer or a hanging man or like that, this is showing you that at some point price was very strong, but it was pushed back down. So that is a sign of weakness. And so it means that expect the next candle to go down. It's as simple as that. That is how we use the weekly cycle to predict where the next daily candle is headed. Now, how do you use this concept in scalping? Because I use it in the 5-minute time frame. All right, so let's analyze Diamond 40 and show you exactly how we use this concept. So first things first is time. You need to come to the screen at 9:30. So we will cut this up to 9:30. like that. All right, you come to the screen at 9:30. What you want to do is identify consolidation. So a consolidation is just an area where we have two or more touches. For example, we have this high here. This is a good high. And if we go to the downside, we can see this whole area here. This is a support. And then this is our resistance. All you need to do is wait for a breakout. So you can imagine this whole consolidation as Monday's candle. Now, Tuesday will tell you where price will go. And Tuesday is just the breakout candle. So let's see. All right, so we have a breakout, which is our entry. So what we will do is we shall buy. And then we shall put our stop loss below breakout candle. And then we are going to target around 30 there. Yeah, 32 is not bad. Now, let's see how it plays out. So next candle is a breakout candle, which is good, nice. That is strength. Then next candle is another breakout candle. At this point, you take your profits. You've already hit a 1:2. Simple as that. Let's look at another example. All right. So we come to the screen at 9:30. We identify our level. So this is our level to the upside. And this is our level to the downside. All right, let's see. Price breaks out to the upside. That is our entry. We buy. We put our stop loss below breakout candle. And then that is 15. We are targeting about 30 there. Let's see what happens. Next candle is a bearish candle. So this is a red flag. All right, next candle is also a bearish candle. This is not looking good. And then next candle, also a bearish candle. This is not good. And then we get stopped out. No problem. Let's move on to the previous day. Same thing. We come to the screen at 9:30. We identify our levels. So we have our level up there. We have our level down here. And we wait for our breakout. So we wait. And then boom, we have our breakout candle there. What do? We buy. Stop loss below breakout candle. And then we are targeting, so that's 14, so we are targeting about 30 there. All right, let's see what happens. Next candle is a bearish candle. So this is a red flag. If we break below that red candle, we exit. Let's see what happens. Next candle, it's a bullish candle. Nice, we almost got stopped out. Then next candle goes up. Now I can move my stops below this candle. Next candle, it's as simple as that. You come to the screen at the right time, you identify your levels, then wait for the breakouts, and then manage the trades depending on whether you are getting breakouts and failed breakouts.